Following 8 days of consolidation, choppy price action, and sideways trading, the stock market, the S&P 500 included, the NASDAQ 100, and the Russell 2000 all made a big move lower at the end of the week. For the week, the S&P 500 finished down 5.1%. The NASDAQ 100 finished down 5.7%. The NASDAQ Composite finished down 5.6%. And the Russell 2000 finished down only 4.5%, which is not really an only. It's just a little bit less than the rest of them. So what are we going to make of this? Are we getting ready to start this next leg down? Because right now it looks like it's almost inevitable that we're going to touch and retest those lows from May. But do we bounce, or do we break through those lows and create a whole new problem for this market? Up until Thursday, I was very unsure how the market was going to respond as it was trying to work its way either higher or lower out of that consolidation. I wasn't sure which direction would break. What I was trying to say, and if you saw it on the live stream and some of the previous videos, I said, just wait for it to tell you the direction. We got that late Thursday afternoon when the S&P 500 and the NASDAQ both simultaneously broke out of consolidation to the downside. I ended up getting into QID, and I also ended up getting into RWM in the process. And so far, they've worked really good. QID's already netted me about 10%. But just because I'm short right now doesn't mean that I'm just completely bearish. I am absolutely open to the fact that we may reverse next week, especially with some of the events that we have taking place, namely the Federal Reserve's FOMC statement that's coming out on Wednesday at 2 p.m. Eastern, followed by the presser at 2:30. That is an opportunity for the bulls to actually rebound. But with the CPI report that came out last week at 8.6% when they were only expecting the 8.3%. Super hot. And now it puts the onus on the Fed to be even more aggressive than what they've been already. And you have the market already pricing in 3 straight 50 basis point rate increases at the next 3 FOMC meetings. But what makes it even more interesting is the need for the Fed to probably do more in this next meeting than what they already had planned, which was 50-point increase. But if you remember at the last presser that Jay Powell did, he said, I'm taking 75 basis points off the table. I mean, the guy, he just backs himself into a corner every time because he doesn't think before he speaks. If the Fed does raise it more than 50, now they're backtracking on what they said just 6 weeks ago. And they have to admit that they're wrong yet again. So what's it going to be? Are they going to admit that they're wrong and increase it even more, or are they going to stick to the 50 point? That's what we're going to have to wait for on Wednesday. Either way, it's going to be a very volatile session on Wednesday afternoon. And it's going to be very difficult to trust any of the price moves in the early going. So yes, the Fed's completely made a mess out of this market and out of this economy. In this video, though, we're going to go through the S&P 500, we're going to go through the VIX, and we're going to go through the technical analysis of each and what we can expect going forward and the scenarios that I could see playing out. So without further ado, let's get right to those charts. On the S&P 500, you have 2 declining trend lines that are currently in play. You have this major one that goes off of the January highs. It's been a long time. It's been, in fact, since late March that we last retested it. But you also have this other declining trend line as well. And this one's a much steeper one. And we almost tested it with this sideways consolidation. We could have consolidated for just a few more days. We ultimately would have tested this declining trend line. But nonetheless, we broke down. The market got much more bearish, and now we are sitting in a situation where we could be testing these lows. In fact, we're pretty much right there from a closing basis. The bigger question becomes, do we try to test these lows from May 20th? And if we do, if we break through them, that's where everything starts to get a little bit more hairy. Now, there's been this declining support level that I've mentioned in a number of videos. We've tested it 4 times, if you remember. This support level has held the last 4 times that it's been tested. And what I can actually see us doing, if we cannot hold this bottom, is for us to hit the bottom support level and then get that next bounce. So there's 2 bounce scenarios that are taking place here. First of all, you have the double bottom. That would be where we bottom somewhere around 388 to 381. If we bottom somewhere in this range here, then you have the double bottom scenario, which could actually create a much more explosive price pattern to the upside. And let me show you what I'm talking about here. Back in February and March, we had this huge sell-off that started the year off, and then we bounced, and it looked like, okay, we're getting ready to go somewhere here. We're going to go back and test this rising trend line, but we didn't. Instead, we retested the lows and retested this declining support level. We made a little bit of a bounce, but not much, and we tested it yet again. And that was when we got the big rally off of the March 14th lows. This big rally right here is what ended up having us go right back up to this declining trend line. So there's a scenario here that I could see taking place where we double bottom and we go right back up to this declining trend line before we start this next leg lower in the market. You also saw it again here in May, where we made a small bounce attempt and then we retested the lows and then we made a little bit bigger of a move before finally consolidating. So that would be like more of a microcosm of what I'm trying to talk about here, where we would have that double bottom or the retest of this declining support level and then get that big move right back up to that declining trend line. So that's a very bullish scenario that I can see easily playing out. Now remember, I'm short on the market right now. I'm bearish. So I've taken 1/3 of my profits already on QID, and I'll look to take some more profits next week. But the other thing here too is to be very open to what the market may do in a more of an unexpected manner. What if we test these lows and there is just no buyers there? Or let's say the Fed does something that really causes the market to panic and just you see mass amounts of panic selling, because right now people are still heavily positioned in equities. So if there is something bad that comes out of this FOMC statement or very much unexpected and it causes a huge panic sell, it is very possible that we see these lows get taken out. And if that happens, there's very little support underneath. And that's probably what gives me the most concern for this market, is that breaking below this key support level, there's not a lot more support levels left to test. Since March of 2020, all we have seen in this market is progressive higher highs and higher lows. Every time we hit a higher high, we come back with a higher low, and it never ended. You never had a retest of a previous support level. It was just always guiding higher on the 50-day moving average. And as a result, there's no multi-levels of support. All of the nearby trend lines have been broken. So where do we go? Where could we ultimately go? Well, there's one major support level that I could see getting tested, and that would be right here between the 350s and the 320s. This is an area where there is some decent amount of consolidation. It hasn't been tested in a long time, so I don't know how much strength is there, but that's the closest thing to support nearby. That would mean you're talking like another 17% of downside in the market. Is it possible? Yes. Is it likely to happen next week? No. There would have to be some major black swan events for that to happen. So I'm not calling for that in the near term. I'm just saying that if we can't hold support, where is the next level of support? And it's right there. That's pretty much all I can find. But also remember too, like any stock, sometimes the market doesn't go back to a specific level of support, and you have to be open to that as well. Sometimes it'll just carve out a new level of support for it to trade off of. So in the coming days, in the coming weeks, what we want to watch for is how well does the market hold these support levels? Can it hold this double bottom? If it can't hold the double bottom, does it come back down and retest maybe around 375 on the S&P 500 or SPY? And if so, can it hold that level? If it does, then it creates an incredible bounce opportunity, probably even better than what we saw in late May. The other thing that we saw on Friday was some very heavy selling. You can see a big above average volume candle down below, and that's the first time we've seen that since about a month ago. So some heavy selling was coming back into the picture on Friday, and I could see that continuing into next week, especially with the FOMC statement on Wednesday. Now let's look at the VIX real quick. And this is the chart that I have been showing for a long time. Guys, this 33 to 34 level, and it has a slight decline to it, but it continues to reject price on a regular basis. So right now we're at 27.75. That means for it to be tested next week, you would need about an 18 to 19% move to hit this level. And it's at that point where we continue to see the price rejection. If you see a price rejection, that could also be in line with this double bottom that we were just talking about on SPY. On SPY, you could see the VIX hit this bottom support level at around 33, 34 on the VIX, 377, 378 on SPY, and then start that rally that I was talking about, because on the VIX, that is ultimately where we see the heavy price rejection, and most of your rallies start off of is when there's a failed rejection at this level. And look, every attempt to break out of it, even if it does manage to break out of it, it only lasts for like 1 or 2 days before ultimately another rally comes about. So next week is going to be a very pivotal week. I mean, the Fed has got to hit this tone right, or the market could really get away from it very fast. I don't know exactly what that's going to take, but I'm trying to look at the different scenarios and to be mindful of those scenarios, and then to react accordingly to what scenario actually plays out. And again, we have to be mindful to none of the above and something completely weird happening, and we have to react appropriately to that as well. So the big thing here is not for me to sit here and say, I got a crystal ball and I know exactly what the market's going to do. I think that's what gets a lot of traders in big problems here, is that they say, oh, the market's going to go this, the market's going to tank, the market's going to go back to all-time highs. And most of the time they're wrong. I would just prefer to follow the direction of the market. Let the market tell me. I don't have to get in at the very bottom, and I don't have to get in at the very top. What I have to do is manage the risk, manage the profits, manage my positions. And if I do that and I follow the market's lead, that's where you ultimately find true trading success. So if you enjoyed this video, make sure that you like and subscribe. Check out my YouTube channel membership. That's going to give you all my stock market research each and every day, not just these videos, but you're going to get updates on all my watch lists, all my daily trade setups that I'm following, plus all the updates on the Mang stocks. I guess Facebook just changed their symbol to Meta, so I guess it's Mang plus Microsoft and Tesla. And I'm going to give you updates on the indices across the board. So check that out. Thank you guys, and God bless.